Thanks for checking out this week's FinPrep Trading and Investment video newsletter. So let's take a look then at the year-to-date index once again, our scoreboard, that is relative performance. These are percentage price changes. NASDAQ giving up just a little bit, with Russell basically doubling its year-to-date percentage return, although still kind of hanging out towards the bottom end of the table, but decent showing out of Russell there. 10-year bonds, U.S. government bonds basically flipped the sign, but still just marginally positive this week. In terms of your metals, copper definitely giving up a bit, so we've seen her be quite finical this year really, moving in pretty drastic fashion, throwing off 3 to 4 percentage changes per week, but still strong on the year. Gold and silver continuing to plow ahead quite nicely. In terms of the currencies, your commodity currencies still holding up quite well, your Aussie and your Kiwi. Japanese yen, terrific week, held up on that short-term support line. Euro continues to chip ahead with pound giving back some. All right, so let's take a look at SPY. Basically, slightly below highs, just chopping around short-term trading trend line with a hold of your 9. Look at how consistent this has been. It's pretty amazing. Your 9-week EMA, exponential moving average, basically being your low of week consistently. So take from that what you will, but it's fairly impressive in terms of how reliable it has been with many of these charts in terms of support in bullish markets. So trannies here, basically we had that bull flag consolidation. These are your weekly bars pulled into your, once again, your 9-week EMA, 2-week lag, and then your nice pop last week, only to give back quite hard here. So in trading ranges, learning how to be quite nimble and getting in and out of positions quite quickly. Case in point, actually here with the Russell small caps, kind of break out above your short-term trend line, only to gap down, hold within it, and manage to close the week above, but still, within the context of an overall. Yes, bull trend arguably, breakout and holding your 50-day moving average here, but still just a bit of movement back and forth. So interesting there. Same story on TLT. Then even we're looking for a potential recapture of that trend line. It came and went, and so here we are on the underside once again. Key point though is still holding currently above that 118, so higher lows off your prior base. And from the longer term perspective, your weekly chart stretching back to 2011 and through 2013. Here we are. The troubling piece here would simply be, moving from oversold on your fast stochastic, reverting back to oversold so soon, without making a terrific amount of progress. So we'll see if we can continue to base out at 118 here and move higher on the TLT. Otherwise, looking for a hold of the 117. Anything breaking below that in a meaningful fashion calls into serious question the sustainability of the bond bull market, which has been decades, of course, in the making here. So UUP gap down on Tuesday and basically just chopping sideways. So prior support at 25.80, strictly speaking, hasn't held in a meaningful fashion. So price hanging out above this trend line off some of your prior lows, off the basically tremendous run we've had from about 24.50 to about 26.75. So giving back, looks like approximately half of that. We'll do some fibos on that next week. GLD, another good week. Had a GLD overbought in the short term. So question here is, are we going to find resistance at this 117? You'll basically notice there's a trend line connecting your final peak there off your breakdown in, September of last year, capping in your reaction rally and then your massive smash down. And here we are. So third touch against this resistance trend line, which could be troublesome at overbought conditions on your fast weekly stochastic and your 20-week moving average. So for gold to hold up here would be, or not get smashed down too hard, and ideally break out above this would be quite important. So in terms of what may provide hope for any future positive price action out of GLD would be SLV being, if we want to think of it in terms of a leading indicator or more sensitive to the underlying price of precious metals as a whole. It has, in a similar construct, broken out already, it looks like this week, in fact, and is currently hanging on above its 250-day moving average. So looks fairly positive if we're looking at silver as an indicator. Similarly with GDXJ, has long since broken out of a similar price channel. And this is where we've basically consolidated, looks maybe 5 weeks, 4 weeks sideways above that short-term price channel resistance line and onto new highs, even though marginally so. Still below the 200-day moving average, but looking quite constructive, needless to say, out of the GDXJ there, and overbought in the short term. Copper basically did have new highs ever so slightly, or briefly really, on Tuesday, only to give back quite hard into your 50-day moving average with price. So recall last time we were here, we were wrestling up against a 50 there, moving sideways, and that kicked off your first rally. Here's your initial retest, and then your really nice shot that we had there a few weeks back. So Ideally, would want to see a hold of the 50-week moving average. If that gives, then we have to start asking if 2840 is going to be retested again or thereabouts. As this has been just a pretty choppy trade ever since moving just exponentially off your basically prior trend line support within the context of a wedge pattern off the multi-year bear market in copper. So good stuff here. Ooh, interesting that we are also at the 9-week moving average. So looking for a potential hold on copper there, but if not, more of a waiting game. FXY Japanese yen ETF, from recall, we were looking for a positive or hold of this in order to give renewed confidence to an extension of the bull market and our bull run in precious metals beginning of year. So thankfully have received that this week. We'll see if it continues to hold. In terms of euro, once again chipping away at that short-term resistance trend line. So with one hit on Tuesday and a hit in reversal on Thursday. But still just continuing to grind ahead on euro there, pretty good. And also just recall within the context of that overall bear market support stretching way back to '08. So fifth primary touch and a decent run so far, about 6 weeks in the making. Finally, British pound basically pulled right in at the end of last week nicely into that 9-week EMA with a 2-day follow through, only to kind of reverse it quite quickly. So, similar to range trading action where you're going to get these moves, quick blasts in and out and violations of trend line. But here we are resting above the 50-day moving average, so would look to see a hold on the British pound here if we were not to revisit a further downside scenario within the context of a range trade. But a hold here of the 50 and on to perhaps 126 would be important. Okay, so that's the update for this week, guys.